morning, everyone that's on the line. This is Greg Phaneuf, SVP, Corp Dev, and CFO, and I'm joined by my esteemed colleague, the other Greg Smith, President and CEO. This represents our first foray using Six's platform. We are appreciative of them and their platform to communicate our story. This is meant to be kind of like a fireside chat between Greg and myself. We have a few sort of canned questions that you would see in a fireside situation, and we have a chat room that will open up at the end. We envision maybe 25 to 30 minutes on this session, and look forward to communicate the story. Obviously, the news this morning is being well received. We're very proud of that, and looking forward to build the business from this point forward. We'll leave the questions at the end, like I said, and we'll just dive right into it. So it's been a busy few weeks getting the PEA out, but moreover, I think it's been a busy few years. And Greg, from the CEO's perspective, how do you think we got to where we are so quickly?
Well, let me just open up a few slides here so that we can speak to them as well as we go along here. But I think when you and I first sat down and started to talk about the idea of creating a lithium company, what was really important to the two of us was we're not here just to become somebody that controls some lithium assets. To us, it was always about being commercial. And so that's what drove our vision, was to be a best-in-class, environmentally responsible Canadian lithium producer. And producer implies we have to be able to go to commercial. And I think what we achieved over this last little while is our vision, and what we've executed on is taking us to a very prolific potential play with strong economics. So that's how we got to where we are today, is understanding where we want to get to and driving there.
And coming, Greg, from a technical background, you've built some successful companies in your past. One of the things that we talk about in the office a lot is it begins and ends with the rock. Do you have any thoughts on, the process by which we picked where we are located?
Yeah. That's something we focused on very early on. And before we acquired our first piece of land, we stepped through this entire thought process, because it's more than just finding an area that has lithium grade in the brine. And we call this our playbook, but I think more importantly, it's something that all analysts, all investors should be thinking about when they evaluate a company like us. And we're proud of the fact that we check all of these boxes. So if you want to have a successful project, you don't just have to have brine in rock. You need lots of it. It's all about volume in the end. And we'll talk a little bit about this in a second, but we have 220 million barrels in every square mile or every section of land that we control. Just out of curiosity, you do see me advancing the slides, right?
No, Greg, I don't from my end. I think you're still...
Sorry, that's my bad. Do you see any change?
You're on the vision slide.
Okay. Well, let's just talk to it, because it's clearly not functioning properly. But
okay, yeah. So you're referring to the playbook that
yes.
So, our experience here is oil and gas, and there are a number of investment banks that have put out similar type of nomenclature. They call it a oil and gas playbook. I think we're kind of using that sort of same methodology or theme in our operation. Correct?
That's correct. And
there you go. That's it.
Okay, I know how to change it now. But more importantly, what we've proven with the drilling of our first well is we also have strong deliverability. And you have to have strong deliverability to feed your main facility. And this was a key factor for us when we were drilling our first well, was to understand that. Part of what we were thinking about up front was, if we're going to be successful, we have to minimize our capital and operational expenses. So to that end, we looked for an area that would help us in that regard. And what we have now is we've got the shallowest area that we can find to work within, that has great reservoir and also has no oil or H2S within the reservoir, because those are contaminants that we would have expensive pre-filtering costs to get rid of. So this, again, is helping minimize our cost structure. The jurisdiction was important to us, and access. Like, can we work all year round? Well, in this part of Saskatchewan, we can work in the field 9 months out of the year, drilling wells, putting in pipelines, and building facilities. We do have high-grade highways right adjacent to where we're working, so we can move the product anytime we want. Great place to work, and it's in Saskatchewan. It's a highly ranked area for doing mining operations. Technology. We took the approach that we weren't going to build our own technology, because it didn't make sense to us when there were so many PhDs, chemical engineers, all out there trying to find the right solution. So we took the approach, we're going to go out and find the right solution for our brines that's already existing. And we're choosing to work with a world-renowned company, Koch Technology Solutions. They've got a proven history. They're working this in the US. It's successful today. And with our brines, they got great results. So last item on our list is the team. And we have a team that's built and ready to execute on our program.
Yeah, the Koch Technology Solution affiliation and could morph into something more strategic. That's exciting to, I think, a lot of us, and I think it's exciting to the investment public in terms of staying close to our knitting. To your point, we're really good at resource development. We're good at applying technologies, but we don't want to be an R&D company and take shareholders' money and put it into those efforts. We'd rather have the torque on investment dollars going into our expertise, which is resource development. So it's a key thing that is the basis of our company. It drives us each and every day, and something I think we're quite proud of in terms of where we've come. Yeah.
And just to really drive home this point of the importance of the productivity per well, built this slide based on our project and our type of concentrations, and we just varied the flow rate out of our wells. And what this shows is we're in the range of where we are very economic, but if we have lower productivity than we see within our area today, what that starts to drive you towards is you need more and more and more wells, and then that will kill your economics. So a key economic decision as we were moving forward. But I'd like to talk to you, Greg, in terms of our strategy and moving the company forward and getting where we are today. There's a lot of parallel things that have to happen at the same time.
Mm-hmm. Yeah, we're busy. No question. I think common with any junior resource company or wearing multiple hats. It's one that we've done before, respectively in our careers, and we're quite proud of where we've come from in the last 2.5 years. And the announcement this morning providing independent corroboration of the economics is just another step in the right direction to get to, ultimately, to your point, Greg, a commercial lithium producing company. We like the Lego block metaphor. I think those who are following our company and the website see this repeatedly, but it really is rooted in resource development. It's just a stepwise fashion to how we've built the company along various disciplines and silos. So, this is a great slide to show where we've come. We've built a significant land position. We're a dominant player in Southwest Saskatchewan. Along those lines, we've continually added to the land position. We've done some small tuck-ins, and now our resource base is high quality, rifle shot almost in a sense, 4.2 million tons of LCE, which could support multiple phases in our view moving forward. That doesn't come without raising money. We've been successful in that regard. We've raised about $10 million to date. Our own money's involved. We're skin in the game and looking to expand that as we move forward. That is only the beginning of the Lego blocks. There's much more to come, and I know we'll talk about that here in a minute, Greg. But there's lots of activity going on. We're busy, like I said, but we're all moving towards ultimately the next milestone. The PEA was important. In our gun sites right now is pre-feasibility, which is supported by additional drilling in the field, which you're totally on top of, as well as a field pilot using Koch's technology. So lots going on, lots more to do, but we're moving in a stepwise, measurable approach as quickly as we can. Very exciting. We're very busy. It's important to kind of take stock once in a while and applaud individuals for the efforts done to date, but that doesn't mean we're stopping. We're certainly charged to move forward, and with you and others in the team, I think that's something that we can achieve.
I'd like to move on to our phased approach and what it's going to take to build our project. So this is a map of the area. You can see where the town of Kindersley is located, and you can see that we are located just about 20 minutes on the highway due north of Kindersley. That's where we've drilled our first test well, which was only the second well in Saskatchewan to be drilled directly specifically for lithium from brine. And you can also see the network of wells that we would put in place to produce into a main facility that would be located in the center of that, right on paved highways. So that gives us easy egress for shipping final battery grade lithium to market. There's 24 wells there, and that network of 24 wells would cost us about $36.3 million US to put in place. And because of the depth, that's relatively inexpensive. Our pipelines, heavily designed to avoid any potential for a spill and problems within corrosion in the pipelines. And our pipelines would cost us about $41.3 million US for a total of $78.1 million to create that network to supply our facility. The facility itself, which would be located in the center of that, would run us about $212 million US. So quite a thorough process to get us to that first phase. Although we are operating in an area that we have a contiguous land position, we feel comfortable also with our checkerboard pattern of land because we can develop off that as we are currently developing this project on a checkerboard. We don't drill every section. So we have 300 sections on this map. We're only drilling 24 of them. So 24 out of 300, we have lots of room left to run. And one of our tuck-in acquisitions really set us up for where we plan to put in the second phase of our project. But all of this is going to result in economics. And I'd like to turn this over to Greg to talk about the economics. They were independently done by Sproul and Associates, which is a respected oil and gas auditor here in Calgary. But they also now do lithium from brines and have multiple clients in that field as well. So we're working with respectable entities. Their economics tie with our internal economics as well. So we feel comfortable with the results that they've put out. Can you talk to the economics,
Yeah,
Greg?
100%. Very comfortable and very pleased with the independent assessment done by Sproul and others that were supporting Sproul's efforts in that regard. We've used a lot of industry experts to put this together. It's been a tremendous amount of work and one that we're proud of. And the results speak for themselves. Some of the comments you made, Greg, at the beginning about where we chose where we did and why we did that. it ultimately comes out in the economics. And these stack up or screen very well with some of our more established peers. We're all in this together, as we say, with an industry in terms of advancing the lithium industry in Western Canada. But we're stacking up well in terms of economics. $1 billion US MPV8 after tax screens very well. Pretty high IRRs. These are based off a $25,000 US dollar sales realized price, which is lower than the current spot price. We think that's a relatively conservative number moving forward. And as I said, screens quite well vis-a-vis some of our more established peers. 335 million might sound like a lot of money for a project, but when you think about the capital efficiency and how companies can finance that, that's not altogether insurmountable. I think if we're showing up good economics, as some of our other companies have press released over time, it lends itself quite nicely into strategic discussions with potential off-takers. And if you have one or more off-take agreements with investment quality counterparties, it would strike us that, Greg, we can certainly attract ourselves to project finance or some sort of corporate financing on the debt side, which ultimately lends itself to less dilution to our existing equity holders. So it's a project that makes a lot of sense. It has great economics. We screen very well on a capital intensity basis, again, owing to some of the factors you mentioned at the beginning. We're proud of it, and we think that it'll manifest itself into shareholder return.
Thanks, Greg. I'd like to turn to how we're going to get from where we are today to where we're going to get to in the future. So here's where we are today. We've had a more complex slide to show how we got to our preliminary economic assessment, but we're now moving forward. And the preliminary economic assessment is a document that allows us to have other discussions like potential government funding, and we qualify for that both in Canada and in the US. Discussions around offtake, because now people can see where we're going and what it's going to take. And of course, we will continue to do our own financing as we move forward within the public markets. So next steps, Greg's already touched on this, will be some field pilot work that we're looking to do with Coke. We'll do some more drilling because we're going to be, and we've already got discussions underway with our resource auditor in terms of moving resource from inferred to indicated and measured. That's news that we expect to be coming out. But what the field pilot will allow us to do as well is start to build more detailed cost estimates for the pre-feasibility study. And with the work that we've put into this to date, we're not anticipating a lot of surprises as we move forward with our costing. That will then take us through to, we can start to do some additional drilling, but we'll get out our first feasibility study. And we're aiming to have that done in late 2025. But as we get there, we'll also be, we know where we're going. We can start the whole permitting phase of the process. And we are working in Saskatchewan. They approve facilities, wells, pipelines every day. So we are not anticipating a lengthy process to approve all of this facility. And we look forward to engaging with the local community to assure them how this really is no different from the industry that they have working in the area already. It's an active area for oil and gas and agriculture. And they're used to working in unison, and we're just going to add another industry to be working in unison with them. With the feasibility study, we can then start to have sufficient capital in place. And Greg's alluded to, we would probably be doing some financing and getting money from different sources, but we can then start moving forward with the construction with a goal of late 2026, early 2027, producing, we say 10,000 tons per year. With the PEA that we just put out, it's now 11,000 tons per year, given the productivity of our wells. So just to wrap this up a bit, Greg, why don't we talk about the value proposition to our shareholders?
Yeah, I think we're certainly, as shareholders ourselves, we're certainly aligned with each and every one of our shareholders, whether current or future. The value proposition we believe is one that warrants further investment. Again, looking at some of the metrics that one could look at from an enterprise value to total tonnage or enterprise value to ton produced per year, we are discounted to some of our peers. So that represents an opportunity to the investment community. I think there's, as we say in this slide, lots of torque as we continue to execute. And I would think, Greg, that we're fairly proud of the fact that to this point, everything that we've said that we would do, we've done. We've communicated, we're going to build a resource base. We've done that. Check the box. We said we're going to come up with the PEA. We've done that. Now we look forward. So, we're very encouraged. The banter around the office is positive, obviously. We look forward to communicating this on a more broad scale to the North American and more broadly European markets. So I'm not sure if I answered your question there or answered your question, Greg, but welcome any comments you might have as the CEO of the company.
Well, I think we can, if we look at this, we could project that, maybe by 2027, with these economics, we have an NPV of $1 billion. But our trajectory here is not just 2027 and reaching that goal. Our goal is all of our subsequent phases. And with the amount of cash and the quick payouts that we have from our phase one and subsequent phases, is that then helps fund our next phases. And it really helps us minimize dilution to the shareholder as we start to grow this project beyond phase one. So we're very happy with the place that we're finding ourselves in today, and we look forward to sharing more with the investors and moving this project forward.
Hear, hear. Sorry, Greg. I think that kind of wraps up our formal kind of fireside remarks. There are a few questions here in the chat that we're happy to answer, so we'll just kind of work our way through them. The first one here, where does the power for the project come from? Does significant CapEx need to be spent on providing energy to the project? Was it included in the PEA? You want to take that one, Greg?
Yeah. In Saskatchewan, you have Sask Power, who operates. They provide a lot of power into this area already and have extra capacity because of the oil and gas industry. A lot of the oil and gas pump jacks have power to them, and there's numerous oil and gas facilities in this area that also receive power. So at this point within the PEA, we went with Sask Power. However, we are looking into, do we do cogen, because we do use heat as well, and could we also then do cogen, produce our own electricity, and we could use the disposal stream of brine the spent brine when we're putting it back underground to help push CO2 underground. It would be a great project for us to take on. But at this point in time, it's not in our PEA. We're just using the available power that we can get from Sask Power right now.
Right. Which kind of dovetails into the next question, keeping on the CapEx theme. And the question is, are our CapEx numbers in relation to one of our peers, Lithium Bank? And the question specifically is, why are we low compared to them? You might as well continue on with that one, Greg.
That's a great question. And we want all of our peers to be successful. We did rely heavily on our Rolodex, if you will, or contacts, because we're in Calgary, we're experienced resource developers, to go and talk to the companies that can help us provide the costs. But keep in mind, we thought about the costs from day one. Our drilling costs are very inexpensive. We can drill these wells in about 7 days. So it's very inexpensive for us to drill our wells, so accessing the reservoir. And I can't speak to their facility costs. They're trying to also be a much bigger project.
Right.
I believe they're over 30,000 tons per year.
That's right.
So you're doing a much bigger project than what we're doing. But keep in mind, we don't have any hydrocarbons or H2S. Those are very expensive to remove in your pre-filtering. And we've chosen to work with a top-tier technology company, Koch Technology Solutions, and we're happy with those results.
Mm-hmm. I wouldn't add to that answer at all. It's well said. Next question here is with respect to the pilot. And the question is, have we decided on a size of the pilot facility? And if so, what will that cost? You might as well just keep rolling, Greg.
We're in discussions with Koch in terms of different ways to do the pilot. They do have a portable pilot built already that they could ship on site and be operational, and it would be processing about 6 cubic meters per day. Or that would be about, call it 37 barrels a day of brine, which would be similar in size to some of the other pilots that we see out there from our peers. It would require us to put in place some facility and lab equipment on site. So cost of our direct costs with Koch and our cost to set that up would be on the order of $5 to $6 million.
Right. With some contingency there.
Yes.
Right. The next question here, it's more of an accounting question, so it might be more directed towards me, and I'm not sure if it really is with respect to working capitals, with respect to deficit, which is on the balance sheet, but that gets into a whole series of the RTO accounting and whatnot. I think maybe I'll just use that as a crutch to answer what probably is on a lot of investors' minds: how do we fund the business going forward? As we reported in our Q1 financials, we had just a snick below $1 million in working capital and cash. We believe that is more than sufficient to take care of some of the near-term catalysts that we've been talking about, namely the PEA. We're funded to take care of that. Beyond that, we are a pre-revenue company. We do need to think about how we formulate capital in the company. Certainly, I think Greg, you mentioned a few slides ago about accessing non-dilutive government money. With the PEA now out there, and we'll file the formal PEA on CDAR within 45 days. That's a key document to actually seek applications under some of the various government agencies north and south of the border to fund some of those efforts. I'd also add, if you're following the Canadian space, the ability of flow-through offerings in lithium from brine operations has now been a policy of the federal government. Legislation's to be followed, but the access to flow-through funding, which is very commonplace in the oil and gas sector, is now able in the lithium from brine space. So we're looking at that as potential ways of attracting capital to the business. No definite plans. Certainly it's on our mind. It's being discussed within the management team and the board, but I'll leave it at that in terms of how we intend to move forward. Anything you want to add there, Greg?
Yeah, I'd also add that we've been investing at every stage of investment along the way. And given that the PEA is now validating our investment thesis from the beginning on why we chose to pursue this the way we did, I look forward to the day when I can put more money into the company through a capital raise.
Exactly. The last question here is a great question. Maybe for both of us, Greg, and we'll end it maybe on this one, just given that we're kind of at our time contract. But what is your opinion of the fair value of the company after seeing this PEA? Greg, why don't you go first?
Okay, well, we will rely on analysts as well to provide fair value. One of the analysts out there right now at Red Cloud Securities is Alina, and she's putting forward a 90-cent valuation. But we know we're up for sale every day, and we look forward to demonstrating to the investment community we're here and we're moving forward. And I think as we do that and people see us moving forward intelligently, because we are very judicious with our dollars, they'll welcome the opportunity to invest and push the stock price higher. But I'd like to hear your answer on that one.
Yeah, I guess kind of being a model monkey a little bit and looking at peers and comps, I would say that if you stacked us up against some of our more established companies, we screen as an undervalued, discounted story. I think that, as I said earlier, represents an opportunity for shareholders, whether in the stock now or looking to make an investment. I think that there's ability to ride some of those re-rates that we've talked about. I think that in junior resource, it's all about risk reward. Certainly, as we de-risk the project, we should see, all things held constant, a reflective market valuation of our company. Looking at what our corporate model would suggest, which we don't obviously put out there publicly, would suggest values far in excess of where the current stock is, but that is unrisked. So life's about risk reward, as I said. I liked your comment, Greg, about we've invested every single round. We believe in the story. We welcome opportunities to invest in further rounds, and I think it's one that investors should certainly put GRD on their screen. Last question is blackout period post PEA. I'll take that one. We are a public company. We have a series of policies that govern the company. We are adhering to best practices along many different lines. Certainly, insider trading, blackout policies is part of that. We have internal guidelines post any kind of announcement. So technically, right now, our management team, our board, and those involved are blacked out. I'm not going to be specific with how many days that is, but we are under a blackout. And when the stock comes back to under blackout, we'll see what happens in terms of activity from insiders.
Thanks, Greg.
With that, just a concluding remark here from me. One more question. Have there been any comms laid out with government to get the ball rolling in terms of getting the funding they offer prior to the PEA info in order to get ahead of the curve? I guess I go back to my comment earlier about the PEA is a critical document based on our understanding of some of the government policies that are out there, whether in Canada or United States. That all I can say is that we're aware of them and stay tuned for further communications in that regard. With that, Greg, I'm just going to conclude everything here. I think this is our first of what hopefully are a few of these kind of fireside chats between Greg and myself. We may involve others in our company down the road, but we are very thankful for those who've jumped on this call. We will make this link available on our website for those who are unable to attend. And if you have any further questions, both Greg's and my coordinates on our website, and we'll take any questions later on. With that, thank you and enjoy the rest of your day.
Yeah, and thank you for the questions. Really appreciate them.
Take care, everyone.